In this video, I will walk you through the Summary tab of the MSA Analyzer. The Summary tab of the MSA Analyzer is your starting point when it comes to underwriting your multifamily deal. When you first open the Summary tab, there are several different sections. The first part of the Summary tab is the description section. In this section, you can enter the details about a property, such as the property name, the city where the property is located, the year built, and the year renovated if the property was recently renovated. In this case, I'm going to name my property tutorial video. Let's say the property is located in tutorial. That's the name of the city. This is a Class B property, so it was built in 1999 and last renovated, let's say 2019. This section shows you output from the unit mix tab. Once the user has uploaded their rent roll, this data will be populated. So these are outputs only. As a reminder, text with blue font are user edits and can be edited by the user. Text with black font are formulas or text and should not be edited by the user. The next section, you do have the option to insert an image of the property. This is suitable and useful if you're sharing your underwriting with investors because they would like to see what the property looks like. In the next section, which is the acquisition information, here I can enter the asking price or the whisper price. The asking price or the whisper price is the price you receive from the broker telling you where the seller is looking to sell this property. In this case, let's say this is a $40 million deal that the broker is looking for. When you enter the asking price, the purchase price will default as the asking price. There's a difference here. If you look at the asking price, if you look at the background, it's light blue with checkered background. If you remember from the introductory video, data in cells with light blue and a checkered background are for display purposes only and does not impact your analysis. When trying to determine what to offer for this property, the user will need to change the purchase price. This purchase price is what drives the returns when you look at the partnership level section. With the purchase price entered or defaulted as the whisper price, the analyzer will be able to calculate the purchase price per unit and the purchase price per square foot. At this time, it's defaulting to NA because the user has yet to enter the rent roll details. The acquisition fee is also driven based on the fee percentage entered by the user in the fee section, and this is automatic, will take a percentage of the purchase price. The acquisition cost comes directly from the acquisition cost tab, and the user will have an option to update that once they get to the acquisition cost. The next line item is the operating reserves or working capital. The way the MSA Analyzer estimates the operating reserves is as a percentage of the purchase price. This analyzer uses the operating reserves to replenish any levered cash flow deficits during operations. This can be seen on line 132 of the monthly operating statement tab. Please note, when it comes to the working capital or operating reserves, any excess amount not used during operation will be distributed on exit. The only exception is if a user enters a minimum amount. The amount specified in the minimum operating reserve balance will not be distributed on exit. This is money that's held back for any unplanned operational task post-sale. The excess operating reserves distribution month defaults to the whole period, and that's when the excess operating reserves will be distributed if not used during operation. The next line item is the going-in market cap rate. Both the going-in market cap rate and the closing date can be updated by the user. The next section goes over the sponsor fees. In this section, the user can model the GP acquisition fee, the asset management fee, the construction management fee, and the capital transaction fee. Please note, when it comes to the asset management fee, the user has the option to estimate the asset management fee as a percentage of the effective gross income or as a percentage of the total equity raised. In the sale information section, the user can model the closing cost percentage, the cap rate expansion per year. This cap rate expansion per year uses the going-in cap rate as a reference. For example, if my going-in cap rate is 5% and my cap rate expansion is 10 basis points per year, and my hold period is 60 months, my exit cap rate will be 5.5% because the model adds 10 basis points each year to the going-in market cap rate. So on exit, the estimated exit cap rate will be 5.5%. The hold period in months is how long you plan on holding the property. The last line item in this section is the sale price calculation. The user has two options as to how they want to estimate the exit price. The first option is using the trailing 3 months NOI and annualizing that 3 months data on the exit year. The second option is using the forward 12 months NOI of the preceding year. Before reviewing the outputs on the summary tab, there's one additional section that the user may need to modify, and that's the GP/LP distribution equity waterfall type. If this is already collapsed, the user has the option to expand this section. In this section, the user can model how they want the cash flow to be distributed between the general partners and the limited partners. In this first part, the user can state how much of the equity will be raised by the limited partners and how much will be raised by the general partners. For our example, let's assume 90% of the equity will be raised by the limited partners and 10% by the general partners. When it comes to the GP/LP profit split, the user has the option to select from 3 different waterfalls. And this is one of the many reasons that makes the MSA Analyzer a robust analyzer when looking at your multifamily deals. The user has the option to select from a perf waterfall, an IRR waterfall, or a tri-tier waterfall. When underwriting your deal, you can also select the all waterfall options, set up the different waterfalls, and compare the returns amongst the different waterfalls. Let's briefly take a look at some of the properties within each of these waterfalls. With the preferred waterfall, the user has the option to set the deferred preferred payback method as no interest or compound interest. This applies if a preferred return promised to an investor is not paid in the specified year and is carried over. That preferred return, if compound interest is selected, will be charged a certain interest. The preferred waterfall also has an option for a GP catch-up or a no GP catch-up. Some operators prefer to have a no GP catch-up, but every now and then there are certain operators that would like to include a GP catch-up into their model. With the preferred waterfall, the user can set the preferred return for the limited partner as well as the preferred return for the general partners. When it comes to the capital cash flow distribution amongst the general partners and the limited partners, the user has the option to set the initial split, set up a hurdle, and once that hurdle is met, the GPs can have a pro mode. The second waterfall is the IRR waterfall, or the internal rate of return hurdle waterfall. In this waterfall, the user has an option to set the tier 1 preferred return for the general partners to be pari passu with the limited partners, subordinate to the limited partners, or no general partner preferred return. This waterfall has 5 different hurdles, which are IRR based, and the user has the option to set the different IRR hurdles for the GP promotes. The last waterfall is the tri-tier waterfall, or the class-based waterfall. This waterfall is made up of three classes of investors: your Class A investors, Class B investors, as well as your Class C investors. Your Class A investors are considered preferred equity investors. These investors get a preferred rate of return, but with no upside in the deal. But they also get a priority when it comes to cash flow distribution over Class B and Class C investors. Both Class B and Class C investors are pari passu and are subordinate to the Class A investors. Similar to the preferred waterfall, the user has the option to set the preferred payback method as no interest or compound interest. Additionally, the user has the flexibility to set the different preferred returns for the different classes, as well as the splits for the cash flow as well as the capital event. This waterfall also has an option for a hurdle where the user can set an IRR hurdle as well as the GP promotes or the splits. When underwriting your multifamily deal as a user, you have the flexibility to explore the different waterfalls and see which one provides the best returns for your investors. The distribution schedule at the bottom compares the different returns from the different waterfalls, and I use this often when I'm underwriting a deal to see how the returns pencil against each other. The remaining sections of the summary tabs are mainly output, and the data displayed on this section are pulled from different tabs within the model. This summary tab serves as your starting point for underwriting multifamily deals, but it can also serve as a dashboard once you've completed your underwriting, because it provides a detailed overview of your analysis. The acquisition section will provide information about your purchase price, your going in market cap rate, your DSCR once the loan has been set up, your going in debt yield, the total cost, as well as the total loan proceeds. The renovation section, if you're doing a value add, provides a detailed information about your renovation schedule, how many units you plan on renovating, the total interior cost, the total exterior cost, your total renovation cost, the average monthly rent premium per unit renovated, when you plan to start your renovations, and when you plan to end the renovations. And the analyzer also does a return on cost calculation to see if your renovation plan is viable. The stabilization year references the data from the renovation end month. For example, if you plan to end your renovation in month 12, the analyzer would add 12 months to month 12, which would be 24. So your stabilization year will be 1 year after the completion of your renovation. In that example, the stabilization year will be year 2. The summary tab also shows you information about the sources of capital at closing, as well as the uses of that capital at closing. In this section, you can see the total amount of the senior debt, the subordinate debt or the supplemental debt, and how much you would need to raise from your limited partners, and how much you would need to raise from your investors. When it comes to the uses at close, this section shows you how the money raised will be broken up, and that's the purchase price, the acquisition fee, the acquisition cost, the renovation cost, and the operating reserves. Please note, your total uses should always match your total sources. If these two cells do not match, the analyzer will spit out an error or a warning for you to take a look at your data. The sale details of the summary tab provides information about the exit year. In this section, you can find a summary of the projected sale price, the sale price per unit, the cost of sale, the sale date, and this is based on when you plan on closing the property as well as the hold period. The estimated sale date, the exit cap rate, we talked about the cap rate, which references the going in market cap rate, as well as the cap rate expansion per year. And lastly, the compounded annual growth rate of this investment. The remaining sections provide you with an overview of the property level returns as well as the partnership level returns. When it comes to the partnership level returns, the user has the option to select which waterfall to display results for, as well as the distribution period, either monthly, quarterly, or annually. Based on the user's selection, the data for the internal rate of return, equity multiple, cash on cash, and average annual return will be displayed and automatically updated. The last section of the Summary tab of the MSA Analyzer is an underwriting snapshot. In this section, you can see what your purchase price per unit is, what your projected sale price per unit, your hold period, how long you plan on holding this property in years, the year 1 DSCR if you get in leverage on the property, your going in market cap rate, your projected exit cap rate, total equity to raise, and the total loan proceeds. As previously discussed, when using the MSA Analyzer to underwrite your multifamily deal, the Summary tab is where I begin my analysis, and it's also the last tab I review before finalizing my analysis. Because within this tab, I can adjust the purchase price to make sure the partnership level returns I'm getting meets my investors' goals. In the next video, we will review the rent roll tab.